Welcome back to Turnkey Property Pros, the Investor Playbook. Most investors spend weeks researching properties and looking at numbers and only about 20 minutes thinking about their actual plan. And so today we're flipping that on its head. Because a good plan isn't a requirement or a checklist, it's a filter, right? It's the thing that tells us what opportunities are good for us and which ones only look good on paper. And we find that most investor mistakes don't happen when they're buying the property. It happens way before that, when someone is looking at a property and starts looking at strategy. And so today I want to talk about plan building. We'll cover how to think about capital, how to weigh liquid cash against retirement funds, and what it looks like to build a strategy that holds up over time. So our motto is always plan first, property second, right? So let's get into it. Nate, when investors first come to you, where are they usually starting at, and where should they be starting?
That's a great question. This will probably come as no surprise to most investors, but everyone starts where? Cash flow, right? Everyone wants to know numbers, how much am I going to make, et cetera, right? And it's always interesting to me when people come from that angle, because when they're putting $500 in the S&P 500, they probably don't even know historically what the returns are, in the last 6 months of the S&P, right? And so people typically start on, to me, it's backwards. They start with, how much am I going to make? How much do I have to invest to make X? Where, in my opinion, it should be, what's our strategy? What's our plan? Let's get educated on the process, right? How does it all work, right? And that's where we come from. We come from a very educational standpoint.
And what would you say it costs someone, whether that's financially or emotionally, when they skip that planning step?
Oh my goodness. Well, how many people have we met, or in my career and John's career, that people chase numbers and returns and ROI, and they bought this stellar on paper return of 15+%, 20+% cash on cash return. And they call us and they go, yeah, I've owned properties before, but I'm a little nervous to buy again. I'm kind of looking into this because the last property I bought it performed really well at first, and then I had to replace the roof, and then I had to replace the HVAC, and then I had to put a bunch of work into it. It's just a money pit for me, and I didn't have good property management. And so that's a very typical response of someone who's either owned before or is nervous about getting into an investment property.
So it sounds like people are just making decisions without a framework, right?
Yeah.
And by starting with their goals, we try to change that.
That's it.
And I know one of the biggest, when it comes to that plan building, one of the biggest questions investors face is, where does the money come from, right? Should they be using liquid cash? Should they be using retirement funds? Combination of that. What do you think should be guiding that decision?
Great question. So this plays right into the plan building educational process that we like to focus on. There's a lot of factors that go into that. How old are you? How young are you? Right? Is the majority of your funds in retirement accounts, or is it liquid, right? There's different rules and regulations around using retirement dollars versus using non-retirement dollars. So, age is a big factor, right? But then it's also personal preference, right? We want to get to know you as an investor. Are you doing this for tax benefits? Are you doing this for, more long-term cash flow? Are you doing it to have, an annuity type structure in your self-directed IRA? What's your goal? So there's many factors that play into that, honestly.
And John, I have a question for you from an ownership standpoint. Does it really matter how someone funded the deal once they're holding the property?
No, I mean, as long as you're in a position where you have what we like to call long-term debts, right? Where the property is, a loan's not going to come due in 10 or 12 or 15 or 18 months, right? You have a long-term runway. And for me personally, this is obviously a personal view, but I like 30-year fixed money, right? Where there's no adjustment period. So, if you're buying or refinancing a property into a 30-year fixed mortgage, your rent coming in the door satisfies that mortgage plus some, meaning you're producing some cash flow and have a rate of return that you're happy with. And no, it doesn't matter if it's DSCR or conventional or some other type of long-term loan product, you're good.
Okay. So it sounds like there's no best source of money, right? It just, what really matters is whether it fits your life and your goals, where you're at.
Yeah. Go ahead,
Go
Amber.
ahead.
Sorry.
Nope.
I was
Go
going to
ahead,
add to
Nate.
that as well. I want to cut everybody off for it. If you're talking about funding source, whether it's, I like to group people into two buckets, liquidity and retirement dollars, right? Sometimes the liquid funding sources can come from, money you have in the stock market, or it comes from a HELOC, or you do a cash out refinance, or you pull money from a primary, or, people ask all the time, well, can I borrow private money, or can I play arbitrage with capital? You certainly can. First and foremost, we never try to financially advise people, but we certainly want to make sure that wherever the funding source is it conducive to your lifestyle? Is it comfortable for you? Right. The last thing we want you guys to do is like over leverage or overstrap yourself to go buy investment properties. Right. The funding source, I mean, a lender is going to look at the collateral and look at where your money is, and they're going to just make sure it's there and in place. So, where it comes from is more a personal question to you as the investor.
Yeah, and that's right. That's exactly what our plan building process is designed to figure out, right?
Mm-hmm.
Like you were saying, excuse me, what's going to work for them, not over leveraging. Where do they have their money at? Do they have it in a self-directed retirement account? Do they have a bunch of cash sitting around? And so with that plan building process that we do here at Turnkey Property Pros, let's say an investor came to you with $50,000 and had no idea where to start. What are like the first three things you need to know about them before you can help start building that plan with them?
Yeah. So I'm always going to ask my clients what I call situation questions first and foremost, right? And it's never to pry, it's to understand their situation. So if someone says, yeah, I got $50,000 to invest, I want to know, okay, well, where is that capital, right? So number one would be like, is that $50,000 in a rental property that you're pulling out as a HELOC or a refi? Is it sitting in the stock market? Is it with a financial advisor? Is that 50K in a retirement account? Like, what type of capital is that, right? I'm always working with investors and saying there's two buckets, right? Like I said before, liquid and retirement. What type of investor are you, right? Because I'm going to educate you based on where that money's at, and we start there, right? That's number one. Number two is once we understand like where that capital is, I'm going to educate my investors on the types of financing you can use with that either liquid capital or that retirement capital, because there's different loan products, right? And then we're going to talk about, everyone talks about asset protection and structure, right? We're going to talk about how to utilize that if we're using DSCR inside of an LLC or a solo KLLC, right? So we start with really, we start with the goals and purpose of the investment. Why the heck are you doing this in the first place? Then capital. Where is that capital? And then we'll go into basically the different planning aspects of what I like to take my clients through.
Where does their timeline come into play in that?
Great
Like,
question. Yeah, as I said earlier, some investors are a little bit younger, some of them are a little bit older. So I'm absolutely going to ask in a very positive way how young you are, right? Where are we at in our journey, right? The 40-year-old who's got a plan on having a career for another 20 years is going to be a much different time strategy and acquisition strategy than my retiree who's 60 and has access to retirement funds and liquidity, right? And so, if you're 65 and you've got $500,000 in a retirement account that you're thinking about rolling over and doing some lending and doing some creative things with it, including real estate, probably don't want to over leverage someone who's 65 and has to take an RMD in a retirement account at 72 and a half, as opposed to someone who's 40 and has all the time in the world to, use leverage and build a large portfolio. Like that investor is going to be in an acquisition mode. How many assets can we acquire in the next 20 years, right?
and I think that kind of touches on what I was going to ask next, which is like, why is it so important that plan comes before people start looking at inventory, start looking at houses and running numbers?
Yeah, I mean, because I think you need to understand the intent behind why someone's trying to do what they're trying to do, right? And sometimes I get on the phones with people, and again, we start with cash flow and returns. Some people think that ROI and high cash flow and returns is like the only way to view a piece of real estate, and it's the only intent I'm behind investing, right? Once I can get somebody to actually have a conversation with me about what the heck they're actually trying to do, right? That's the basis of going and investing in real estate, because you have conversations with people sometimes when they go, oh, maybe this isn't even for me, right? Like they think like one rental property and they invest $35,000 is somehow going to retire them. And
Yeah.
there's so much stuff online right now about super high yield and super high cash flow that they think somehow a lot of people think investment real estate is like a magic pill. It's not. Actually, John, you had a great post on social media today, actually, that I liked. And you talked about one retirement property or one investment property is not going to retire you. Let's have a plan behind buying that property, right? So to me,
Yep.
the importance of having a plan, it's like anything else. Some investors say, well, I want to make a six-figure income in real estate. Okay, great. Where do you want to start? Do you have some investment capital? So I said, yeah, I have $35,000. Okay. Well, we need to sit down and map that out with you, right? We can probably start with one asset, but how do we go from 1 to 10 in a 10-year window, right? And we'll teach you that, and we'll show you how to do that. We'll show you some strategies behind that, right? That's why
Yep.
it's important to me.
And one thing that's, we always stress is, we use the strategy of buy, hold, and wait, right?
Mm-hmm.
It's real estate, the longer you own it, the higher likelihood you have for success. It reduces your overall risk and it provides you with the biggest return long term. I was with longtime friends and speaking at one of her events, and we talked about a portfolio of rental properties that she just sold, and it was kind of funny because I actually didn't remember this, but when I first met her, her and I had sat down, and she was first getting into the real estate game, and we built out a plan, right? And the plan was, to buy a certain amount of properties to create a certain amount of long-term wealth for herself. She wasn't so, interested in cash flow immediately because she was growing a business, and she knew she was going to get cash flow from somewhere else. Long story short, and I'll kind of consolidate the numbers. She bought a 10 pack of properties for about $600,000. She wound up putting about $130,000 down on those properties. And between the debt pay down over the course of 10 years, meaning the renter paid down the loans on the properties, the cash flow that she received from those properties over the course of those 10 years, and then the additional equity she received from the appreciation, right? In 10 years, when she sold those properties, which she sold them, the end of last year, she made $1.45 million, right? So 110,000 and $120,000 investment, buy, hold, wait, just let them perform to selling them and being at almost a $1.5 million profit, which was pretty crazy. So that's where the power is letting it do its thing.
That's a
I
great.
love that story. Yeah, it's a great story, John.
Yep.
Oh, it's awesome. I think it shows too the power of that planning in the beginning, right? Creating that
Yep.
decision framework. What are your goals? Okay, now we're only going to look at things that match those goals and help propel you towards that goal.
Yeah.
To
100%.
let's look at 100 different properties all over the place that really don't fit what you're trying to do. And like we said at the beginning, right, it kind of creates this filter for people. The plan is the filter to keep the bad out and let you focus on the good.
Yep.
So I know that you've kind of touched on it a bit about, when somebody comes to Turnkey Property Pros and we start that plan building, we start with their goals, we start with where is their capital at, what are they trying to do? Can you kind of walk us through a little bit more of what that really looks like? I know we have a process at Turnkey Property Pros of what we go through, steps we go through. Can you give people a little bit of an idea what that process is from kind of that initial conversation all the way to how we help them select a property?
Yeah, absolutely. Yeah, absolutely. First and foremost, you're typically going to hear from one of our executive assistants, Kit. He might reach out to you and have an initial conversation with you. Once you have a conversation with me or with John, we usually have at least a 3 to 4 call coaching, almost like a coaching phase with you, right? Where we're going to sit on the phone with you. And that first call with us is more of like an intro, get to know you, understand where you're at, where your capital base is, what are your goals, what's your timeline, right? And that's really what that first call is for with us. And if it makes sense for you, great, then we'll continue to have subsequent phone calls. And, that could mean after that first call, if your goal is to do, a portfolio of properties inside of a retirement account, we might get you to a custodian for rollover, or we might get you to a lender for a pre-approval. Right. On that next call we have with you, we see where things are at with you. Did you sit down and talk with your spouse or your partner about the goals you shared with me? Did you sit down and work on your pre-approval? Did you work on your rollover? Or do you have questions based on, what you talked about with a lender or talked about with a custodian? Right. That second call, we get a little bit deeper in kind of the nitty gritty about, okay, here's the real numbers, right? You are pre-approved for this amount. You have this much capital set aside. You rolled over this much. Let's dive in a little bit more plan building. Let's talk about your timeline and what the reality is. Like I'll sit down with you and sometimes we do Zoom calls and we'll look at numbers and tools and we'll figure out based on the goals and the amount of capital you have, here's how many properties we can start with, or here's where we can get to in a 5 year window, right? I try to keep it within 3 to 5 years as opposed to, this big outlook because most investors start with 2 to 3 doors, right? But that second call is more about prepping, building, figuring out actually what you're trying to execute. And then usually that third call is prepping you to start buying inventory, right? Investing. That's the fun part is like actually picking your rental properties and going out and working with a partner and saying, all right, Steve in Akron or, Mike and Indy, we have a client that, has X amount of dollars where this is our goal. We need to say this purchase price and we actually put the plan in action and we work directly with our partners to go pick rental properties. That's the beauty of it. That's the fun part. So what you didn't hear from me is we will immediately sit down with you and shove real estate down your throat. And this is it. Buy real estate. Buy now. No, we take a breath, guys. Inventory is easy. You can put your finger on a map and buy real estate wherever the heck you want. I don't care, right? We're here to slow the process down and figure out this is something you want to do. It's a big decision to spend $40,000 on a piece of real estate, right? So we have a system and a process for a reason, right? We take you through a process of multiple calls to prep and educate you because our mission is education, right? To me, that's our company mission is the educational process and getting you prepped, on how to buy investment real estate. So I will get off my soapbox here, but it's a really good question. I'm not sure if
Good
there's anything
soapbox.
to add to that, John, but
No, good soapbox. Absolutely. Right. At the end of the day, we think about from a macro level, right? The economic problems that most Americans are having because of the lack of planning for retirement, right? You walk in to your W-2 job, right? It's either the first couple days or maybe after day 90 that you've been hired, and the HR director or someone in that team slides a packet of papers across your desk and says, "Okay, would you like to choose low risk, medium risk, or high risk? Select one." And after you select one of those, it's how much would you like to put into that account? What percentage of your paycheck? And especially if you're, in your 20s, this you're like, man, I like to drink on the weekends. I'm not going to put too much in there, right? I need as much in that paycheck as possible, right? And little are we thinking like, how much do we have to contribute in order to hit the number we need in order to, retire in the future? So, taking the time to slow down, evaluate, review, and come up with a plan is critical to not wind up in the place that we're at, right? And most people don't come to us because their retirement's all figured out, right? They come to us because they need to figure out retirements. And the only way to do that is to put a plan in place.
yeah, 100%.
Yeah, I think that's something that's, truly unique about what we do here, right? Like we keep harping on, I know, but like plan first, property last, because so many people don't do that. And that structure, I feel like it really is about protecting investors from making like poor decisions if they didn't have a plan to follow, right? And again,
Exactly.
that's good for them.
Yeah.
So I'd love to know, do either of you have an example of a time where a client was saved because they had a plan in place, either saved from making a bad decision or they were able to say no to something and hold steady that ended up working out for them?
Yeah, I 100% do. I helped a client in Florida recently, whose husband passed away, unfortunately, and she got left with quite a large 401k inherited, right? And she was able to self-direct that 401k, and instead of putting it in, a lifetime annuity where it's locked up for a life, right? We got her into some real estate that produced a six-figure income for her in retirement, right? And so we went out and we bought probably 8 or 9 doors cash, right? Again, this is about plan building. This wasn't about over leveraging her and buying as many properties as possible. This is about creating an income stream, right? So she went from a 401k that could have been tied up in a lifetime annuity, which is what she's being pushed to do, to buying investment properties, which produce a six-figure income for her every month inside that pay, or every year rather, inside that 401k, right? The rents were collected, sent to that solo 401k, and the checks came in. She also had some daughters They were both abroad. They lived across the country, but having that security of having income coming into that retirement account, and if you take 10 grand a month out of your self-directed IRA or solo 401k, what you're not doing is you're not depleting the value of it every month, right? So if you've got, $1 million in a regular 401k, or the market, but your returns aren't keeping up with your distributions, what are you doing? You're depleting the value of that account. If you've got real estate just creating a paycheck for you inside that account, you're not depleting the value of the portfolio itself. It holds true as long as the
Yep.
market holds true. Now you're just using the money like a paycheck, right? So it was a unique experience and a unique plan that we were able to build with her.
That's
And I
awesome.
think just to add to that, something that's even more powerful, you mentioned her daughters, right? Depending on how the contract was written up, depending on how long she lives, if she would have put her money into that lifetime annuity, once it was all said and done, and she had personally passed away, there's a chance of probably a better than 50% chance that her daughters would have been left with nothing, right? And yes, she would have had consistent income with no fear of loss, but now her daughters, by the time it's that time, will have millions in real estate,
Mhm.
which is an awesome legacy to build out.
100%.
So if, again, it sounds like having that plan in place protected her, right? There's probably some uncertainty at that time in her life, trying to deal with that and figure out
Yeah.
what's the best move. And now we've created a lifetime of sustainable income for her because that plan was in place and was tailored to her and her needs at that time. So I think that's a really cool story. So for anybody who's listening to this episode, maybe is starting this investment process, if you could give them like one thing to think about, what would it be?
Well, I'll go straight back to how we started this. Um, what's your intent and what's your goal? Like, what's your intent and what's your goal? Let's talk about, education. Let's get educated on the investment and then execute, right? Because I've met plenty of people. You might own 10 doors and done pretty well, but usually even people that I've talked to that own 10 doors, we can talk about something that you haven't learned yet, right? So I would leave you with, what's your goal? How educated do you want to be?
Yeah, I love that. And, from my side, more on the goal and the planning piece is, you know, most people who are existing investors, right? The reason why they invest in real estate is because they heard of and saw the value of investing in real estate, right? They were like, hey, I can get cash flow or I own assets, right? I can touch and feel what I'm investing in, right? And in the deep recesses of their mind, they knew it was a good choice, right? But in a lot of cases, what surprises me is that's where it stopped, right? And as you said, Nate, there was no end goal. It's just like, well, I'm just going to buy as many as I can and see what happens, right? That's just like, I'm going to put as $500 in my 401k every month and in 40 years, see what happens, right? And regardless, if you don't have any properties or you got 20, right, we got to have that end goal in place. And it's funny because we were talking about the woman Tiff who I just met with this week, right? She's struggling because we originally set a goal for her. She hit it, and then she just kept walking past it. And then she set another goal, her and her husband, and she hit it. And she's like, John, you need to work with me to hit my goal and then stop because I want to stop working and not be a shitty mom. Those are her words, not mine. Uh, and I'm like, Tiff, you're not a bad mom. You just dedicated. So creating a goal is huge and a plan on how to get there. So you either know
Yeah.
when you hit it, or at least you know what you're aiming for.
Yeah. All right. So I think like we keep saying, right, plan first, property after. That's kind of the whole
Yeah.
idea here, right? All right. Well, thank you so much, Nate and John. Really appreciate the chat today, and we look forward to seeing you on the next one.
Thanks, Amber.